Ladies and gentlemen, good evening. Thank you all so much for being here with us this evening. We will start momentarily, so we're asking everyone who is still standing around to please take their seats at this time. There are several seats available and empty just for you. And we're also asking for the persons who are on the outside. I promise you that inside is much more interesting. So we're asking you all to make your way on inside, please. We will begin shortly. Thank you. Ladies and Ladies and gentlemen, we are asking everyone again to please make their way on inside. Please take your seats. We are ready to begin. Our keynote speaker is here. And we are just about ready to begin. So we're asking everyone again, please kindly take your seats at this time. Good evening, everyone. Okay, let's try that again. I know the day was long, but we're here now. It's a good place, a safe space. It's a place that's going to get you really excited. So let's try this again. Good evening, everyone. Well, that sounds a lot better. Thank you all so much for your patience and attention. Again, we are really, really happy that you decided to take up our invitation to be here with us. Please allow me to acknowledge the Honorable Dr. Nigel Clark, MP Minister of Finance, who's here with us, who will also be our keynote presenter. We also are expecting, I do not see him yet in the room, but we are expecting U.S. Ambassador to Jamaica and Nicholas Perry. Valued partners of the Caribbean Development Fund and USAID, SYGNUS directors and chair executives, SYGNUS team members, and they are also called SYGNITIANS. Am I right or am I right? Almost. Can somebody give me the proper pronunciation, please? SYGNITIANS. Thank you. I stand corrected. Ladies and gentlemen, again, good evening. Welcome to the SYGNUS Caribbean Community Resilience Fund Forum. And you will not see forum on your agenda, but I've added forum because in addition to the presentations that you'll be hearing this evening, we're also going to make this an engaging session with our Q&A to come later on. We are delighted that you decided to spend your evening with us. My name is Debbie Bissoon, and a few of my favorite words since becoming a mother has been sustainability, resilience, and accessibility. Anybody else shares those favorite words as well? Yes? Absolutely. And this is the reason why. Because we are a Caribbean region, and we have to think about not just our time here in it, but for the future. This is a landmark initiative dedicated to enhancing growth, sustainability, and resilience across the Caribbean. And as a region, as you know, we are united by so many things, our history and culture. But also what unites us is our collective vulnerability. Therefore, our solutions must be...
CIO and founding partner, Jason Morris, state capital raising is tough. He shared that with a group of colleagues. And that is beyond telling. This is what I consider a founding partner or a very successful alternative investments firm in the Caribbean. And here he's stating capital raising is tough. So think of all those SMEs. Think of all those aspiring entrepreneurs. Think of all those climate-centric people who are thinking of ideas of solving climate sustainability. Most of those will not qualify for access to capital or credit at major institutions. Thereby, the importance of developing the sector, and again, this fund provides the elevated visibility that is needed to unleash both more of the local institutional capital, but more importantly, institutional capital at scale from the developed world from the affluent asset owners. Today's, it's a milestone in the joining of forces, a really important aspect here, because all of us who are part of SYGNUS, most of us have worked in the past for large institutional organizations, banks, non-banks, large institutions. And while we were there, we all recognized how many opportunities were missed, how many opportunities went unrealized because the aspiring entrepreneurs, the proven but overlooked businesses just didn't check every box. Yet, we knew instinctively and by common sense that these are mostly businesses that provide basic services, important services to our communities, and have shown durability through thick and thin. So the fact that we know that, but this fund, the genesis of this fund comes from the CARICOM Development Fund partners who actually recognized the same need a few years ago. And together with the support of USAID, developed this idea to the point that today we're celebrating or highlighting the launch of a fund that unites forces and has elements that provide a lower risk way of asset owners to participate in this immense opportunity. Investing in the Caribbean Community Resilience Fund is a compelling proposition. It has substantial downside protection thanks to the vision of our partners at the CARICOM Development Fund. To them, I am confident that at SYGNUS, we will lure further capital from the developed world to further mitigate the perceived risk of investing in this fund so that we can unleash, again, more of the capital of the asset owners in the Caribbean and other places around the world. I leave with this thought. Realizing authentically transformational impact requires feeling uncomfortable. People want to change the world. They want to make transformational achievements. But that doesn't happen unless you feel uncomfortable. So we are addressing that. At SYGNUS, we are addressing that massive opportunity to do the right thing for a community that for so long has been, in need of capital at scale so that we achieve economic opportunity for all. So thank you very much.
Ladies and gentlemen, please put your hands together once more for Mr. James O'Connor, please. Thank you so much, sir, for your presentation and setting the context for today's event. Indeed, this capital, this fund gives the region access and visibility. No doubt about it, it gives so many great ideas out there that has been sitting dormant, the opportunity to activate and really provide the solution that we are seeking for the sustainability of our region. So again, we say thank you so much for giving us your opening remarks. To continue the proceedings, ladies and gentlemen, I welcome at this time Mr. Jason Morris, co-founder, Executive Vice President, Chief Investment Officer, SYGNUS Capital, for the introduction of the Caribbean Community Resilience Fund. I must tell you a little bit about Jason. He's a purpose-driven and relentless individual in his mission to create a lasting impact on businesses, people, and the economy. Driven by a passion for creating nimble solutions, addressing critical needs faced by entrepreneurs and investors, Jason isn't afraid of a challenge. To establish SYGNUS, he played a leading role in one of the largest equity raises done by a startup entity in Jamaica. Now he is committed more than ever to working with team members to create a world-class SYGNUS culture that will revolutionize the way financial services are delivered in the Caribbean. Please make Mr. Morris welcome.
All protocols observed. Good afternoon, everyone. Welcome to the Jamaican launch of the CARICOM Resilience Fund, or the CARICOM Community Resilience Fund, or CCRF or CRF, whichever one you want to choose. So what I'm going to do today, I'm going to spend a few moments introducing a couple of new concepts as we go through the presentation, and then I will try to focus on the reason why we are here. I'll give an overview of what the fund does, but I will spend a lot of time focusing on what I want you in the audience and you who are watching and listening online, who I want to participate in the fund and focus on one particular investment tranche of the fund so that there isn't too much information and information overload. Okay. Is there a... All right, let's get into it. So, this CARICOM Community Resilience Fund is a fund that was conceptualized by the CDF along with USAID, and incidentally, SYGNUS was working with a multilateral for almost a year to create pretty much almost the exact same thing. And we went to a conference overseas and exchanged notes. And long story short, we were selected to be the managers of this fund. And it is... So, we have been championing and pioneering alternative investments across the Caribbean region for 7 years now, since we started SYGNUS, which has one dedicated purpose, which is to accelerate the pace of growth across the Caribbean region using alternative investments. That's our only purpose in life. And standing here today in front of you and about to speak about an alternative investment idea, which is a resilience fund, which the entire region needs, is just profound. So, what are the objectives of this fund? Effectively, this fund was created to focus on climate resilience. And I don't have to get into what that means. Everybody in Jamaica knows what climate resilience is, right? We just witnessed maybe half a year ago what happened in Montego Bay with freak storms that destroyed a part of our coastline. We all know what is happening over in Portmore at your favorite fish spot, where the beach that was there is no longer there, or it's unrecognizable. And the stories go on and on. Bahamas was destroyed by a hurricane, and there are so many Caribbean islands. Jamaica itself almost perennially suffer from massive flooding, winds, high winds, etc., and hurricanes. So we all know what climate resilience is. Another objective of this fund is to also focus and enhancing the robustness of the infrastructure for Caribbean countries across the region. So we have port infrastructure, road infrastructure, you have dry docks. Very soon we will need to have electric vehicle infrastructure as we get with the times and advance technologically. So that's another focus of the fund. A third and critical focus of the fund is to provide access to financing for businesses and projects that don't have access to it. And we have figured out a unique way of how to provide that access, which I'll get into later. Fourth thing is we want to provide investors in the Caribbean with an opportunity to deploy capital into an impact investment opportunity. There is no accessible impact investing opportunity at large in the region, right? You might have a little pocket here, a little pocket there. This is the first fully focused, concerted effort where we are taking capital from multiple sources, pooling that capital together, and we're going to redeploy that capital into businesses and into projects, as you'll see in a little while. And finally, and perhaps maybe you could say most importantly, is to provide what we call technical assistance for capacity building. Now, what does that really mean? It means that there are many businesses and many projects, right, that exist, that are excellent ideas, exceptional ideas, but they are not bankable. Why are they not bankable? Well, for them to become bankable, you need to do some preparatory work, you need to get some data, you need to do research, you need to run pilot projects, and this takes capital. And as we all know, capital is like liquid gold. People don't just throw it away like that. So to make many projects and many business ideas bankable, you need to have effectively grant funding. And technical assistance, I'm happy to say that this fund is going to provide technical assistance both in terms of monetary terms as well as actual resources to solve some of the problems and to bring some of the ideas that have existed for maybe decades in some instances that simply can't see the day of light or the light of day because the type of capital that is required to bring them to market does not exist or does not exist in a form that will allow those projects to come to life. So, segueing instantly into this slide, which is a term that I'm going to introduce for those who don't know. So, what this fund is going to do is provide what we are calling catalytic capital for the region. What does the fancy term mean? Well, effectively, we have a situation where we have good access to bank financing. If you have enough collateral, you can get bank financing all day, every day. In Jamaica in particular, we have good access to the equities market. At one time, we were the leading equities market in the world, so there isn't any gaps there. But then you have an entire tier of capital that is missing, and that exists in the alternative space. So effectively, what this fund is going to do is a number of things, right? This fund is going to provide capital that is very patient. So that means we're not looking to get a quick buck, invest the money today and get a quick buck tomorrow. It's patient capital. Secondly, the capital is very flexible, meaning if you come with an idea that's a blank sheet on paper, pure, we will solve that problem for you from a blank sheet of paper perspective. So we are creating the solution to align perfectly with what the objective of the project is or the objective of the business. So that's flexible capital, which those in Jamaica who are used to SYGNUS know that that's the purpose why we exist in life. Third thing, which is new, is that we are going to be able to provide concessionary capital. Now, what does this mean? So this fund was able to attract capital that is willing to accept a lower rate of return than what can be gotten in the normal market. And I'll go through all of this. I'm just introducing you to the terms, right? And when we get to the slides, I'll repeat. The fourth thing is that we are providing capital that is risk tolerant. Let me say that again. Risk tolerant capital. It means that it's capital that is seeking out risk, which I guess you could say, am I speaking foolishness? But this fund has to be able to provide that type of capital in order to solve some of the problems that we're going to go through later on. And perhaps finally, but by no means least important, the way the capital is being deployed, it has to have an impact. That means for you to say that the capital is having an impact, you have to have some way in which you're going to measure what it is you are doing. So if you deploy $100, well, how do you know that the $100 is having an impact? And working with our partners, we have pretty much created some tools that will screen the type of projects and investments that we go into deliberately so that when the money is deployed, the money will actually do what it was intended to do, and we can track and trace and say, this is the effect of that capital that was deployed. One more point. This fund has to do what we are calling, or have a crowding in effect. So what do I mean by that? Well, investors in Jamaica and across the region love to invest in debt instruments, right? And if you come to them with a good idea, and it seems like it's risk-free and secure, and you're giving them some distribution, they love it. But if you come to them with excellent business ideas, you're going to get one or two or a few people. So what this fund had to figure out was, how do we combine capital that is patient, capital that is flexible, capital that's going to have an impact, and then entice into that pool, create a coalition of the willing set of investors, so to speak, so that investors who don't want to take certain types of investment risk can participate in these investments without suffering those risks. So, we're going to get into that later. Now, the fund, as I said before, is patient capital, which means it must have a time horizon that's decent. So this is a 10-year fund, and there's an option to increase the investment, the horizon of the fund from 10 years for 2 extra 1-year periods. So in effect, this fund could end up to be an 11-year fund or a 12-year fund. But base case, this is a 10-year fund, right? Pretty straightforward, which means that the fund is a patient investor. 10 years is a decent time. For most investors in here, if you ask them, what does long-term mean? They will tell you 2 years or 3 years, right? That's the kind of market that we are in. So this is for our patient investors, and very important. So the fund is structured such that it has investment periods, and there are 2 legs of the fund, as you'll see in a little bit. There's a debt portion of the fund and an equity portion of the fund. The debt portion of the fund has an investment period of up to 7 years. So we will take money and invest the money, get repaid, and then reinvest that money for a total up to 7 years. Once you get to the 7-year point, all investments stop, and then from the 8th year, 9th year, and the 10th year, we'll be giving back people their principal, giving back your investment. The equity leg of the fund is structured slightly differently, where that fund has a 5-year investment period. Why the difference between the debt portion of the fund versus the equity portion? Well, if you are doing equity investments, it takes a longer time for you to, first of all, generate the returns that you need, and secondly, for you to harness that capital, meaning for you to exit. If you put in $100 and invest it as equity, when you want to get back your money, it's not like a debt instrument where there's cash flow that's supporting you or you get paid out very easily. The equity investment has to perform. If it doesn't perform, you could lose your money. So the fund has to be structured to provide all of that, right? Now, we said that the fund is $135 million plus. It's upsizable. It's very important for everyone to understand that we have already, from the Caribbean Development Fund, or CDF, $15 million US. That's a commitment from the CDF. I don't hear no clapping. So I don't want you to think of this as $15 million. Okay, they give $15 million. I want you to understand the importance of the 15. So many people have been talking and singing and dancing, but as they say, put your money where you can finish the rest of the phrase, right? So to commit $15 million US to a fund in this economic environment says a lot. But if we go further and to say that $15 million from the Caribbean Development, from the CDF, is going to go into the riskiest tier of the fund. And later on, when I explain the different tiers of the fund, this $15 million is taking on pretty much all the risk that the fund will be taking, which we are going to term first class capital. I don't want to bring that up until I get to that slide, but I'm saying this $15 million is at the base, supporting all the investors that are going to be at the top, right? So it's called first class capital, which means if, God forbid, we do an investment and we lose money and we make a loss, that $15 million is what's going to absorb that loss. And I'll get into that a little bit later. And that's very important to understand. Remember I said that we need to have different types of capital. It needs to be patient. It needs to be capital that can take certain types of risk. So this $15 million is that type of capital. But to go further, part of this $15 million is also going into technical assistance, which is providing grant funding, which is what's going to provide capacity building resources. So let me say it again, because now clapping on, I understand, like I understand what happened. The CDF has committed $15 million, and on top of committing $15 million, they are saying, okay, let my money be junior to everybody else that's in the fund. So that's the first thing, hope of money, and then they are taking most of the risk. Then they are saying, okay, I'm also going to provide grant financing for capacity building for businesses and entrepreneurs and for projects that need de-risking. But you're not done this yet. They also are saying that I am going to take a concessionary rate of return. What that fancy term mean? All right, get it? Yeah, man, clap. It means that the CDF is saying, even though I'm putting up, I'm the first investor to put up money, my money is going to take the most risk. Part of my money is actually going to, you can give it away to people. Well, not give it away, but, right? I'm also willing to take a lower rate of return, the lowest rate of return of all the investors in the fund. So if this doesn't mobilize the CARICOM community integration further, I don't know what will, right? So kudos to, the CDF and all the contributing members to the CDF. Give them a round of applause. So just in case you're wondering, see our 1 million plus the right that's beside them, right? Yeah. Yes. Okay. So the next question is, well, given we talk about this beautiful money that we have, what are we going to do with the money? Well, very simple. You know what SYGNUS was created to do is basically to use capital and make it very, very flexible and customize and deploy that, and then just keep doing that over and over, repeatable process. So we're going to deploy flexible capital to who? SMEs and infrastructure projects. That's what we're going to do with the money. And I'll go into the different sectors, etc. Later. So, in terms of strategy, what are the two key focus areas? And I kind of went through this already. Climate resilience, which everybody in here know what that means. If you don't know, raise your hand and I'll give an additional explanation. And economic sustainability. And economic sustainability means putting capital into those projects, businesses, which will help to retool and build, create jobs, and ensure that the economic base is diversified and is sustainable over time. That's what economic sustainability really means. So it's very important. There are many, many challenges in the Caribbean region, but when we looked at all the challenges and narrowed them down, right, these two jumped out at us, and climate resilience and economic sustainability overlap almost, one for one, par for par. Now, to simplify how this fund operates, because as you can imagine, if we have concessionary capital and we have money that we are give away, this thing must have some complexity to it. So to simplify it, break it down slide by slide. So this fund is really two sub-funds, but I'm not going to use the word sub-fund. I'm just going to call it two portfolios for simplicity for everybody to follow. So there are two portfolios, a debt portfolio and an equity portfolio. And for this presentation today, we're going to focus primarily on the debt portfolio. And those who want to, enjoy some higher returns, you can always speak to us about how you get into the higher returning equity portfolio later, right? So, starting with the debt portfolio, there are 7 key priority sectors that the fund is looking at, right, which are on screen. So you have renewable energy, top and center. So this is where you speak about your wind, your solar, anything that you are using that is renewable. We have waste energy projects, we have batteries, so anything that is focused on from a renewable source or that enhances renewable energy, which is very, very important for the region. Why is it important? Well, basically, the cost of energy in the region is very high. In some places, it's 60 cents per kilowatt hour, like some islands in Bahamas, etc. So if you were to use renewable energy sources, which are very, very cheap, you bring down the cost of energy, which is very good. That's economic sustainability, right? But more importantly, you also reduce your carbon emission footprint, or reduce the amount of greenhouse gas emissions, which is important to obtain carbon neutrality objectives that each of the CARICOM member states have signed up to. And I think Jamaica's is 30% by 2030 and something like 50% by 2050 or something like that. So to assist us in this, it's important that we are targeting renewable energy. We're also focusing on the blue economy. And for those who don't know what the blue economy means, it's basically utilizing our oceans and wetlands, right? Where you are able to trap. By the way, for those who don't know, everybody who say, when you say plant a tree every day, if you want to reduce carbon emissions, well, if you were to go and quote unquote plant forests in the ocean, right, or increase the number of wetland biodiversity, you would actually have a much, much more substantial impact on reducing carbon emissions. So, seagrass, mangroves, etc., actually are called carbon sinks, right? They capture carbon at like 40 times the rate that trees that grow on land do. So it's very, very important for us to be focusing capital towards blue economy projects. And, we were in Bahamas recently, and there is a fantastic blue carbon project where they have mapped the seagrass across the 700 islands of the Bahamas, and they are trying to create the very first carbon trading engine within the Caribbean region. So that's a very innovative way to actually get us to closer and faster to our net zero targets, because we know that the ocean is a bigger graveyard for carbon emissions than anything that we have on land. We also have sustainable housing. Obviously, we need to build houses that utilize sustainable and renewable energy and sustainable materials, as well as ensure that we have affordable housing for economic sustainability. ICT, anything that is dealing with technology and is technology focused, that's a critical infrastructure that Caribbean islands need to be deploying capital into. The debt side of the fund is going to do that. Transportation, anything that is increasing efficiency or on a net basis is not increasing CO2 emissions. You have electric vehicle infrastructure that, for example, is being rolled out in Barbados. That we see the footprints of that in Jamaica. Jamaica is trying to ramp up its electric vehicle sector. We need capital to be deployed into those. Governments across the Caribbean region don't have the capacity to do all of these investments. In the developed world, we have stock markets, we have bond markets, and we have about $3-4 trillion in alternative investments that are focused with deliberate capital being deployed into these types of investments. In the Caribbean region, you can count on one half a finger, little finger like that, how much capital exists dedicated to address these issues and these ills. And that's one of the reasons why this fund is so critical. And every single Jackman in this room, when we are finished, make sure you get your ticket. Financial services, basically this is an access to finance issue by providing capital where it's needed. Deploying capital into fintech projects, receivables financing, factoring, inventory financing, where we buy the inventory from you and sell it back. As long as you are not increasing your greenhouse footprint or greenhouse emissions, then we are your one-stop solution. And finally, agriculture sector. There is not a lot of capital that is focused on agriculture, even though from a food security point of view, we need that. When we had COVID and the borders were closed, yeah, everybody felt it, right? So we have to figure out a way, and we think we have, that we need to deploy some capital into agriculture that is focused on climate smart agriculture, which means, anything that's using hydroponics, aquaponics, using oceans or ponds, creating a circular flow in terms of, using fish to effectively grow vegetables, etc., and having a circular economy impact. So that's the debt part of the portfolio. The equity part of the portfolio, similar theme. The only difference between them is that it's more focused on those 4 sectors that you are seeing, and it is specifically targeting early stage investments. Let me say it again. It is targeting, to a large extent, basically addressing a market failure that we have. If you have something that you focus on climate or renewable energy, and it's early stage, as they would say in country, God go with you, right? We're going to get the capital from to do all of the prep work to then bring it to a stage where it becomes a bankable project. Well, that is what the equity part of this portfolio will do. So we're actually solving a market failure issue. And our partners, who are along the coalition of the winning partners who we have, who are putting capital into the equity portfolio, are very, very focused in terms of the CDF and all of our multilateral partners and other investors, that this is a core market failing in the region, and we need to address it. There's no capital that exists that's going there. Certainly it's not banks. I was at a Jamaica Exporters seminar yesterday, and somebody was asking a question about renewable energy and solar panels and why banks not financing it. And I told them to come here today, so I hope they are in the room. All right, there you are. Now, in terms of geographic region, I'm going to move very fast now, and then I'm going to slow down again. Geographic regions, the capital on the debt side of the portfolio is focused where 70%, up to 70, well, at least 70% of the capital is going to go to the least advantaged countries, the poor country. Them. I know that Guyana is in there, right? But technically speaking, they're still poor. They find some riches, but let's see how that goes, right? And then 30% to this kind of richer countries. On the equity portfolio, there are no limits in terms of where the capital can go, and we have actually added Bahamas and Dominican Republic. And just to say that we are in conversations to add other countries to the debt portfolio as well. So it's not finalized yet, right? Now, I'm going to slow down right here. So, this fund has what you call an innovative blended finance structure. Yeah, fancy term again. Well, it's very important for you to understand the terminology, right? And I'm going to explain in a minute. So, the debt part of the portfolio is 75 million US, upsizable, of course. And there are 3 tranches of shares. The tranche I want you to pay attention to is the preference share tranche. And the tranche I want Mr. Zaka to pay attention to is the preference share tranche and give you a little ticket in the senior A shares. Right, Mr. Zaka? Yeah, put some pressure on you early. All right. So, the first tranche, right, which is the preference share, targeting high net worth clients, regular mom and pop and pension funds, deliberately so. And this tranche is actually what you call the de-risk tranche, as you'll see in a minute. So we have de-risk the return for this tranche. We enhance your return and we de-risk it, which means the risk of you losing your money is very, the minister is here, is very low, as you'll see, Minister. And the return that we are giving you is more than adequate, as you'll see in a minute. And we're targeting between 20 and 30 million, right? And then you have what you call a senior A shares, which is targeting development financial institutions, primarily. And that is the second class of capital that the fund will have. And then you have what we're call it the CDF class, right? The people who put up 15 million and say, make my money, be the money, that take the first loss. So that 10 to 15 million is junior, so it's actually subordinated to the senior share and the pref share, which means it's providing protection to the senior share and the pref share, as you will see in a little while. Similarly, the equity part of the portfolio, the equity portfolio is targeting $60 million upsizable, and it does have 2 share classes. It have a junior class, which again is taking first loss protection, and a senior class, right? And I'm not going to spend too much time on that. But what I want to highlight for you is that you saw in the debt portfolio, there was up to $15 million in first loss protection, the junior shares. And in the equity portfolio, you also have $15 million of junior shares. 15 plus 15 equals 30 million. All right, let me say it again. 15 plus 15 equals $30 million of first loss capital. This means we are saying that this fund have investors who are willing to take up to $30 million, put it down and say, if there are losses, we will absorb it. Why? Well, because we are trying to crowd in all of you in the room. One, you would not have heard much about resilience fund before, or impact investing before. It's new. You might be risk averse. You want some, returns that every 6 months or whatever you get it. The only way to convince you to come into this fund so that we have a wide pool of capital is to de-risk the fund, such that your capital ain't the one taking the majority of the risk that the fund is going to have. So $30 million of first loss capital is a massive amount of money, right, to actually put down to take first loss risk. Now to the part that I know all of you in here waiting. Okay, so how much return me come here? You talk how much money, how much return me can get. So let's go again. So for the debt part of the portfolio, that's the only portfolio that has preference shares. The preference shares is protected by, in the case of the debt fund, up to $15 million of first loss capital. That means $75 million is being invested in the debt portfolio, and $15 million there for absorb any loss that take place. I don't. Look like I need to tell you guys to get up and stretch or something, you know, I'll give you some food. I don't understand. You don't understand what's going on. All the investment that you make, whichever bond you buy, which bond you have, or which investment you make, where, when you make the investment, somebody tell you, say, by the way, may have some money beneath your money, where if losses occur, this money I go protect you where you don't make no losses up to this amount. You have any investment like that? All right. So, see there again, first loss protection, approximately 20% if you take the $15 million and look at the $75 million debt portfolio, that's how much first loss protection you get. So, given that it's a debt portfolio, it's investing in debt instruments, and you have the track record of SYGNUS Credit Investments to look at to see over the last 7 years, we have deployed over combined 600, 700 million if you include Puerto Rico. How much money have we crystallized in losses? 0.3 or so percent. And we go through something named COVID, which is a 100-year event where the whole place locked down for like 2 years. All right, I went through concessionary capital already, but it's here again to make a statement. So remember, in the debt portfolio, you have that first loss tranche. But the reason why you're able to get 8% paid on your pref share, you know, is why? Because the CDF say, only give me 4% preferred return. We will take that. And because they're taking that lower return, it means that we can use their low cost financing to make the overall debt portfolio have a lower overall cost of capital, which means we can actually fund projects at rates that we couldn't fund if we didn't have a 4% cost of capital in the fund. And it also means that we couldn't give you 8% for your pref, which has principal protection. Imagine you get 8% in a US dollar, by the way, be a US dollar we are talking about, right? Sorry, Minister. And you have downside protection, right? And we are give 8%. The fund lasts for 10 years, so you might ask the question and say, well, it's 10 years. Okay, cool, but guess what the next point be? Your pref shareholder, you get back your money first. That clap then are really strong still, you know. Let me say it again. You are the preference shareholder. First of all, you are the only investor who is actually getting a distribution. So every year, every 6 months, just like how you have a normal bond, you're getting your semi-annual distribution, right? Which all of you love. Yes, we know, Mr. Zaka, you love it too. But on top of that, the first somebody to get back them principal is the pref shareholder. Let me say it another way. The senior B and the CDF, who is junior, now get back not even one dege cent before the pref shareholder get back the whole of the money. I see you now, Mr. Zaka, can expect a big ticket from you, man. Very good, very good, very good. So let's segue into the pipeline, right? So we can speed up now. So at SYGNUS, pipeline origination is not a problem. You know, we have over $250 million in pipeline. More than $90 million of that is already mandated transactions. We have transactions that we have executed already and warehoused. Fancy term just mean we fund it already and it sit down and wait for the new fund to come so that the fund can take it over and start earning. So right out the gate, right? So in terms of, transactions that we are looking at, and we have a lot, and maybe you can, in the Q&A section, you can ask some of the questions. But those are two examples of debt investment and equity investment. Let me focus on the equity one, which is effectively looking at the Grenada utility, who is looking to launch one of the largest renewable energy projects in the country's history. Basically, almost 50% of the size of the grid is 18 megawatt. The grid has 35 megawatt at peak capacity. This would mean that the cost of electricity in Grenada would plummet, right? Because we know that solar is very cheap. It's a solar project, by the way. And more importantly, for us, the impact that it would have, it means that the number of barrels of oil that Grenada would use per day would obviously plummet. And this project, right, one of our partners, Rocky Mountain Institute, which I may not have highlighted it. Rocky Mountain Institute is our partner for everything renewable energy and climate as a technical consultant and lead consultant on those projects. And they are renewable energy and climate experts working in the Caribbean. So they are our partners. We have executed a memorandum of understanding with them. So they have been working on this for a couple of years. And the next step is to get this to bankable stage, which we expect to be done during the investment life cycle of the fund, right? I'm not going to spend too much time on pipeline. I prefer you ask me those questions during Q&A. Governance, you know the SYGNUS governance thing already. We have the chairman of the board right here. You can quiz him, in the Q&A section. If you have any, you shouldn't have any questions after this. But we effectively have what you call an impact investment committee, right? We have an impact scorecard, which means we are screening we're not just somebody. You can't just come to us and say, "Oh, I have an idea," and we invest, right? We are going to screen deliberately to ensure that the capital is going into what it needs to go to. In other words, we're not going to do any greenwashing. This is serious business. So we have independent committees, independent decision making, just like what you are used to for all of the other SYGNUS investments. If you are Jamaican, you know this already. I won't spend too much time on that. Expert team, I shouldn't spend much time here either, but I will, just to highlight the fact that we are adding to our plethora of expertise climate and renewable energy, meaning this is going to be a part of the SYGNUS DNA where we are making permanent hires to fill those buckets. We can't say we want to be investing in impact and climate and then we don't have nobody who, cut them teeth on that and can say this is my track record on that. So we have to fill out those spaces which we are in advanced discussions so to do. So we'll just add to our level of expertise. We have 84 people across 3 different Caribbean territories, Jamaica, St. Lucia, Puerto Rico. And so we're just building up on that team. So we get to the final slide. And the question here is, well, I hear you present a lot of things. Why should I care? Why should I participate? Well, there are 5 simple reasons why you must participate. The first one is that you cannot find, or I challenge you to find, a better rate of return as a pref share investor for the risk that you are taking. And I'll give you all a year to wait. Can you find an investment where you put up your money, you get 8% US dollar returns, you will get back your return before everybody else who in the investment with you. You have $15 million below you, that's junior and subordinated, that if something bad happened to some of the investment them, it's going to absorb that for you. And it is managed by an expert team. You can't, all right, me just leave that alone. The second, equally important, is that this is a one-of-a-kind, transformative impact investment opportunity. If you never know what impact investment be, today you find out about it, and you need to participate, right? This is an opportunity for you to participate in the future of the Caribbean, for your children and grandchildren and great-grandchildren, to participate in deploying capital into businesses that are going to generate jobs, to participate in projects that will enhance the resilience of the country that you live in. So when you see the floods and you see the strong winds that are blowing, you can say, yo, me put down our money to help mitigate against the ravages of climate change. When you see EV infrastructure, you drive from here and go Mandeville, Mobile, wherever, and you see those EV charging stations, you can say, yo, my money help finance some of that too. That is what the opportunity is. So it's actually investing and doing good and making a good return on your investment. And you're not taking a massive amount of risk. The third is that, can we deploy the capital? Well, I mean, it's $75 million in debt investments for the debt portfolio, right? And the last time I checked, you know, SCI, which is a different company, but it's private credit, just like what this debt portfolio is going to do, would have pretty much done pretty decent in terms of deployment. And if you combine the entire platform that we have, would have done pretty decent. So deploying the capital, finding the transactions to deploy capital in is not the problem. The problem is to get the capital to come into the fund to actually go and deploy, which is why we are here. The fourth reason is we have assembled an impressive, what I'm calling, coalition of willing partners. First on the track is the CDF, Caribbean Development Fund. Every time you say CDF, you say yeah. CDF, CDF, CDF. All right. Yeah. For them money are the pretty money. But we also have, I guess I can say this publicly, the IDB, who has gotten gone through their first level of approval at their approval committee, and they are working through to get to their next level of approval, and they'll be in Jamaica in another week or two to complete their due diligence around this fund and SYGNUS. So what I'm saying to you is that you have CDF, which is, call it the regional multilateral. You have IDB, who I can publicly name, right? I hope the IDB people don't beat me up too much. And I can safely say that there are other multilaterals that we are speaking to, but I can't call any name. In addition, I can say that there's a large anchor investor that will be accompanying the IDB to do a joint due diligence, right? Who are committing substantial capital that is similar to the capital that CDF has put up. In other words, on the equity side of the portfolio, their capital is going into the early stage, riskiest, most difficult, the market failure part of deploying capital into climate. So that's a big transaction. Whenever the transaction closes, you know, we will inform you appropriately. But we have many, many investors like that. And I see Mr. Zaka here. I'm sure that Mr. Zaka is going to put in a ticket. So, you know, you will be in good company, right? And lastly, I spoke about the track record of SYGNUS. And the track record should be viewed in terms of very strong governance principles and structure. All of the publicly listed companies, you see how we communicate with you, and we'll communicate with you similarly for this venture, this fund. We have independent board of directors, independent board subcommittees, independence in the decision-making process. We have dedicated teams with no overlap. So if you are in the hunting team, you can influence the decision that is being made by the stewards of the capital team and vice versa, right? So we basically have a best practice structure. But most importantly, our assets under management, and the capital that we are managing, Our only focus is just alternatives. That's what we do, that's what we specialize in, that's what we live, that's what we breathe every day. So final thing I would say, and I spoke to the minister off here, so he won't mind if I say it out publicly. I want Jamaica to take the lead in creating a welcoming framework whereby capital that is being harnessed, because what this fund is doing, you know, we are taking capital from investors in the US, possibly in Europe, all over the world, to come into this fund to redeploy into our economies and our businesses and our projects. That's what we're talking about. Investors who are international, who are taking that money and taking the riskiest pool in some instances, taking their money and putting it in the riskiest pool. So that's very, very important. But to create the vehicle to do it, we have to dilly-dally and dance too much, right? We want a framework whereby if we are doing a venture like this, the corporate structure that is required to do all the fancy footwork such as carried interest, which I won't get into today, etc., is very amenable, because that is what the international investors are used to. So when they come to our region, they want to get the same kind of framework. And I'm sure that Jamaica will take the lead on this. And I invite all of you, pension funds, tourism interest, TEF, NIF, all of you guys, you need to put in your ticket. The time for talking is over. Real money is on the table. Put your money where your mouth there. Thank you very much.
Ladies and gentlemen, please put your hands together once more for Mr. Jason Morris. And you have to give him a big round of applause, because you see what can happen when you don't clap him loudly enough. Simplified, clear, engaging, sometimes animated, but really and truly rooted in passion and truly thorough, ticking all the boxes on innovation and investing for climate resilience and economic sustainability. Thank you so much, sir. And I must add as well, with an unmatched rate of return. So are you ready to invest? That sound like they're ready, Mr. Morris? Sound like they're ready? No, they don't sound like they're ready. Okay, are you ready to invest? I see Sir Zach on his phone, you know, it's a good sign. You know, he's telling somebody right now to, you know? Yeah. Okay, all right, Sir Zach. You okay, Sir Zach? You want some water? You want anything? We just want to make sure you're fine. Okay. Ladies and gentlemen, this is what we want to hear from you. We are opening the floor at this time for questions. And as you can see, we have the answers for you. So please, we have 10 minutes for question and answers. Please do not be shy. As you can hear, the leaders here at SYGNUS, they are happy and able to answer all of your questions. So please do not be afraid to ask them. Anyone? Don't all? There we go. Thank you so much. Please state your name for us.
Hi, good night. Thank you, Jason, for that very detailed presentation on your sense of humor. My name is Cherie Williams, and I'm the founder and CEO of Vehicle. It's a peer-to-peer car renting platform. We'll be launching on May 13th. And my question is, as you talked about the fund, I didn't hear you talk about the process or the timing. Can you just explain a little bit about that and what that would be like? And two, will there be any focus on female founders?
Two exceptional questions. Beautiful questions, just like how you look, right? So let me start with the female founders first. Yeah? So part of our screening criteria has a little bucket in there that gives the investment a greater rating to move from being a transaction that is screened to a transaction that we recommended to the committee for approval if it has some element or a large element or any element of female ownership. So So the answer to that part is yes. And then the question about timing, that was deliberate, right? Because I want to see if you guys are really serious. So the fund will have first close at the end of June. And the fund has two, what I'm going to call closing periods, right? So the way how we're going to do this, because we want to maximize the return on your invested capital, we ain't taking all your money one time and then have the money sitting on, right? The way this is going to work is, for the most part, we're going to take half the money upfront on first close, June 30th, and then we're going to have what you call a second close, which is effectively a second round of capital kind of thing, which is going to be more than likely about January, February of next year. So if you are ready to go and you meet the minimum criteria, then June 30th is the date for you. We have an investment vehicle that we're going to create specially for Jamaican investors who, for example, may want to participate in the fund with Jamaican dollars. Yes, Minister, I'm facilitating. And that may take a little bit while longer. So once that is incorporated and done, we'll communicate via social media and in the press, etc. Maybe a sub-Fandango launch around that. So you'll hear more about that. So that's the answer to your two questions, I hope.
Does that answer your question? Thank you so much for your question. Do we have any other questions on the floor? Okay.
All right, Jason, thank you for inviting me here today. I'm the gentleman from the manufacturer 360 yesterday. I'm Jason Robinson, CEO of Solar Buzz Jamaica. I just wanted to say it's an amazing thing that you guys are doing. This is what is definitely needed. Will there be a minimum size investment that you'll be doing in projects once it's funded?
So your question, thank you for coming, by the way. Yes. Your question is, will there be minimum size investment into projects? Yeah? Yeah. So, yeah, there'll be a minimum size. We're looking at, okay, so let me back up. So we're looking at about 250,000 US equivalent as minimum, right? But that's not exclusive. Because if you fall below that threshold, more than likely what's going to happen, we're going to say, okay, you need some amount of capacity building or technical assistance or whatever in order to scale, right? And so if you're below that, what will more than likely happen once you pass the criteria is that you could get some capacity building money or grant financing money to help you to scale and achieve some of the objectives or move some of the hurdles or roadblocks that exist in your way that is preventing you from being bigger than you are. So, to answer your question, there is, but there also isn't, because instead of it being an investment, it could pretty much be grant financing or provision of technical assistance. I hope I've answered the question they asked.
Mr. Morris answered the question, right? Yes, okay, great. Do we have another question on the floor? We have 5 minutes left. Any other questions? No? Mr. Morris was clear and everybody understands everything and everybody willing to invest? All right, there we go. We have another question here in the middle. We're carrying the microphone to you. Please introduce yourself.
Thank you. Good evening, everyone. I'm Stephanie. I work with Jamaica Sotheby's International Realty, the best real estate company in Jamaica. So my question, I'm waiting for him.
Okay, that's fine.
I was learning not to speak when somebody else is speaking. Jason, whenever you're ready, I'm ready. All right, so my question is, for example, if I want to do like an investment portfolio for multiple investments in real estate, would you guys facilitate something like that? For example, a mortgage, because as you know, these banks are not like as modern as we want them to be. So self-employed people like myself, it's more difficult to get mortgages. So how is SYGNUS going to help us with that?
Okay, thank you for that question. I think you're asking a different question though, right? Which is general advice, which I guess I can give you the answer to that in a one-on-one forum. Because this fund isn't really about that. It's really deploying capital into economic sustainability and climate. And we also focus on real estate as a housing as a theme, right? But I want to make up one point clear. So clearly what we are doing here today is introducing this fund. We don't, have any specific, the part of it that will attract the regular normal investor hasn't yet been registered with FSC or anything like that. This is just a big launch of the fund. And as I said before, I'll provide those additional details whenever that time is right. But to answer your question, I can answer that question in a one-on-one forum. I don't want to be giving open investment advice in this forum.
Thank you so much, Jason. Thank you for your question. We have 2 minutes left, 2 minutes and 25 seconds. Do we have another question? No? There we go. Final question. Thank you so much. Please introduce yourself.
Hello, everyone. My name is Katie. I'm a student at the Wharton School of Business. I'm also a contestant in this year's Miss Universe Jamaica pageant. My question is more so on your point about economic sustainability. I'm wondering what the fund is doing currently to invest in the youth and ensure that young people aspiring, in their careers and whatnot, are being invested in so that Jamaica and its economy is fueled with the right employment and labor.
All right, so good question, right? How should I answer it? I mean, as I stated earlier on in the day when I started the presentation, is that there are many areas of concern that exist, right? And at the end of the day, we have to decide to select what we think is the best use of the capital that we have. So obviously, there are going to be spin-off positive externalities in terms of employment creation for youth and so forth and so on. But at its core, what we are trying to do is to address what we see based on all the research and all the data that we have looked at, which are the two biggest challenges that the region faces. So if we were to think about, if I have some money and I had no choice, I was given one choice or two choice, where should this money go and what the biggest impact it would have on employment, jobs, youth, providing economic opportunity, is these two areas that we're actually deploying the capital. Because if we don't have any, if climate change destroys the economies of the region, then there's no opportunity for youth and employment. And likewise, if we don't invest capital to build a more robust and diverse infrastructure, the same thing will happen. So that's the best way I can answer the question.
Thank you.
And we say thank you. Thank you so much. Can we put our hands together again, please, for Mr. Jason Morris for taking those questions, which brings us to the end of our Q&A segment. And thank you again, Sir Morris, for your presentation on introducing the Caribbean Community Resilience Fund. Ladies and gentlemen, we're going to be continuing with the proceedings. So at this time, I'd like to introduce our next presenter to bring remarks. She is Dr. Laverne McFarlane, Senior Economist for the CARICOM Development Fund. Just to give you some information about Dr. McFarlane, she currently serves as a senior economist, as said before, at the CDF, where she provides intellectual leadership in economic analysis and contributes to the institution's strategic direction. She leads research on financial innovation, regional integration and cohesion, and develops policy options and strategies for the development of competitive regional economies. Dr. McFarlane, a true thought leader in the economic development of the Caribbean, has played a key role in developing the CARICOM Cohesion Policy and the Credit Risk Abatement Facility, CRAF, at the CDF, where she serves as the chief underwriter. Ladies and gentlemen, please make her welcome.
I just wanted to rally back to the question, that very last question, because it's important before I get into the remarks. So it embedded in the screening process, just as it's similar to the question on relating to female entrepreneurs, there is a principle relating to youth, particularly in the agriculture sector. So relating to the opening, let me just start officially. Madam Master of Ceremonies, Minister of Finance, Dr. the Honorable Nigel Clark, CEO Beresford Gray, CEO James Connell, of course, relating to heads and representatives of financial institutions, pension funds, and other potential partners. Of course, I couldn't go without special mention to Mr. Zaka. His name has been called so much. Distinguished guests, ladies and gentlemen, good evening. So it is increasingly evident that islands are disproportionately affected by the onslaught of climate change. Countries lying on the front line in the war on climate change are grossly unprepared to sustainably address climate matters. The front line is where sea levels will rise the most. Jason mentioned about Helsha Beach. It is where temperatures will rise to the most uncomfortable levels. Of course, you know, especially for females who are not quite there yet. And it feels sometimes that we're experiencing our own summer. But, you know, we can say it's climate change, or it's not change of life, climate change. So the combination of these two will lead to more devastating climate effects, including harsher droughts and increasing categories of hurricane in the Caribbean. All Caribbean nations lie on this front line. Small island states in the tropical belt, frequently devastated by hurricanes that are increasing in their ferocity, face existential risk. This risk is not only substantial, but it is also rising. To give an example, because we are so familiar with all the islands in the region, Dominica, and I'm taking Dominica out because they've been hit so many times. In 2011, they were hit with Tropical Storm Ophelia that wiped out 40% of their GDP. If that wasn't enough, 4 years thereafter, they were hit with Tropical Storm Erica that wiped out 90% of their GDP. And you think that, boy, they have had it. 2 years after that, in 2017, Hurricane Maria wiped out 220% of that country's GDP. Now imagine, there is no tolerable level of insurance premium that could insure Dominica against losing up to 350% of its GDP every 8 years or so. It is climate risks like these, if they are known, large and rising, then these risks will only be uninsurable if pooling with those who are not exposed. The rising probability of increasing destruction from climate change with growing correlation with other adversities makes insurance against loss and damage from climate change at tolerable premium uncommercial. The only path for those on the front line is to urge those countries to reduce their greenhouse gas emissions, to press for mechanisms to finance climate-related loss and damage, and certainly really the only thing that we can control is to build resilience. Building resilience will take a whole lot of precious money. It is not necessarily that everything that's built resiliently costs more, but what's important is that we are able to build in a way that we are building comprehensively. And what this means is that we don't just need resilient buildings. We need resilient livelihoods. We need resilient supply chains. We need resilient healthcare systems. We need resilient bodies and resilient minds. Resilience, therefore, needs to connect everything from the seabed to the skyline. Many Caribbean countries are facing economic and fiscal challenges arising from the impact of increasingly frequent and intense adverse weather phenomena associated with climate change, which has been further exacerbated by the COVID-19 pandemic. Mechanisms to finance climate-related loss and damage and building resilience that will mitigate impacts and give Caribbean countries the ability to withstand these events are paramount to the region, given the outsized impact that climate change could have on Caribbean territories. Now, based on the cost of building back better after a hurricane event, this pretty much we recognize is just about north of $20 billion US in the Caribbean. Of course, more appropriately, well north of the closing the gaps in terms of what governments can afford in the region and what they can fit on their balance sheet. Now, to close this gap, the region needs to develop a market that creates demand for and supply of private sector finance investments in resilience, of course, blended with increased flows of concessional financing from development partners to scale up public sector efforts to addressing those challenges. While public sector balance sheets are stretched, private sector savings institutions are awash with liquidity. We need to mobilize private sector savings in pursuit of building resilience. Now, if some resilient projects can generate an adequate collectible financial return and private sector is willing to fund them, it will allow the public sector to focus its balance sheet where those projects can do so, right? Beyond the private sector savings of the region, there is significant amount of international savings managed by institutions that have declared that they wish to invest in reversing or offsetting or mitigating or basically addressing loss and damage related to climate change. Indeed, these fund managers report that the problem is not insufficient funds to co-invest with, but an apparent inadequate number of promising projects that are additive. By additive, it means that while these investments make a financial return, they would not necessarily ordinarily happen if the focus were not on resilience. Building resilience, therefore, we're here on the front line on the war of climate change. We have those projects. So it's a matter then of matching where the supply of the resources are and where the demand for those projects exists. So to do this, access to affordable finance is necessary at all levels. Here in the Caribbean. The climate change crisis is an existential threat to our people, our homes, and our livelihoods. The CARICOM Development Fund has been tasked with establishing a market inclusive of sustainable pipeline of projects for economic and climate resilient investing. In accepting that challenge and to deliver on the mandate, We partnered with the USAID as it is recognized that building resilience will take a significant amount of financial and technical resources. These are the kinds of partnerships that are needed to build capacity, to develop and implement innovative solutions to mitigate against loss and damage, and to adapt to climate change. These solutions, however, cannot be a one-size-fits-all, but must be tailored to the needs of a community, taking into consideration the geography, the socioeconomic dynamics, as well as the cultural and political diversities. The region and our stakeholders need to respond proactively to build community preparedness and to offer a transformative solution that shifts the paradigm away from waiting for the next disaster or climate event, then to react inevitably to all the adversities that comes with it, leaving us, of course, with a worse off position to our economies. Look at what happened in Dominica. To achieve this, the Resilience Fund is meant to unlock the potential of capital from the international and Caribbean financial systems by crowding in resources from the private financial institutions, as well as pension funds, corporates, philanthropic funds, among others, with the aim of investing to create a sustainable source of financing resilience in the region that will be easy and quick, or quick and fast, they say, to access, will strengthen and lose the resilience loop, and of course, to offer a predictable source of financing to minimize disruptions to resilience building. The Caribbean Community Resilience Fund is an integrated and transformative climate and disaster fund for investors to get a higher social and economic return on investments. The image of any such mechanism and how it represents itself and who is operating it is very important to us. That's why we've chosen SYGNUS Capital to be our fund managers. This will, of course, increase the probability of getting to the sources of who want to fund such activities. It is equally crucial to ensure that such mechanisms are agile enough, raising and disbursing capital for a 21st century country crisis. To attract these resources, however, we need to strengthen capacity to address resilience in a comprehensive way. What is needed, therefore, is capacity building to overhaul the system and create a shift in the mindset of stakeholders, which is why you heard Jason mention about it. We've deliberately built into the fund a technical assistance sidecar, which is grant funded, financed geared towards building capacity. With the assistance of cross-boundary advisory through the USAID, we have been able to structure this fund at a pace consistent with the urgency needed to address climate change issues. The CARICOM Development Fund, through our fund managers, SYGNUS Capital, is introducing a resilience fund tailored to the Caribbean. This fund is set to be transformative as it will invest in projects to mitigate against loss and damage and adapt to climate change by building resilience in a comprehensive way. It is meant to be catalytic for early-stage private sector and large-scale public-private philanthropic partnership investments. The CDF will, of course, as you heard Jason say, put in all the pretty money, $15 million US, of which $10 million will go towards providing first loss, and $5 million dedicated to the TA sidecar. Got it. We have all confidence in SYGNUS to deliver on the objectives of the fund, so join me, one and all, as we wish SYGNUS every success in managing the Caribbean Resilience Fund. Thank you.
Ladies and gentlemen, please put your hands together one more time for Ms. Laverne McFarlane, Senior Economist, Caribbean Development Fund. Thank you so much, Laverne, for your presentation. Resilience from the seabed to the skyline. I just love how that sounds. It should be plastered somewhere, I think. Absolutely, through investment. You know, even the Bible says that money answers all things. If somebody can tell me where that scripture is actually founded, then... Anybody can tell me? Anybody knows the Bible that well? No? Ecclesiastics, you can refer, you know, ask your pastor when you go to church on Sunday. But it does say that money answers all things. So, in fact, we're very happy and we are very grateful for the CDF for starting us off on this mission of the Caribbean Community Resilience Fund. Thank you so much as well, Laverne, for underscoring that it is really our responsibility to make ourselves resilient. So thank you so much for doing that. Ladies and gentlemen, we are going to keep the momentum going because we do have at this time our keynote address by a gentleman who really needs no introduction to present on the importance of investing in resilience for the Caribbean. Ladies and gentlemen, please help me welcome the Honorable Nigel Clark, MP, Minister of Finance and the Public Service.
Madam Master of Ceremonies, Chairman and Directors, Management of the SYGNUS Group and the SYGNUS Fund, ladies and, no, Chris Dacker, ladies and gentlemen, good evening. It's good to be here. And good to be here on the occasion of the launch of the CARICOM, or the Caribbean rather, Community Resilience Fund. Resilience is a topic that is of critical importance to Caribbean island states. We are small islands dotted around the Caribbean Sea. We are all open economies that depend critically on the outside world. Our economic bases are narrow. We maintain our own currencies, which means imposes sort of restrictions, or shall I say requirements, for us to be able to trade with the outside world. It's challenging to make life work for small island states. Even if you have high per capita GDPs, as is the case with a number of Caribbean islands, the structural economic realities of Caribbean life, even if there is some amount of stock of wealth as measured by invested capital and flow as measured by annual GDP, it can all go away with one or two economic shocks. And as such, economic resilience has got to be the key economic priority for Caribbean countries. And economic resilience can be measured or pursued in different ways. What it means, in essence, is the ability of the Caribbean to bounce back from economic shock whenever these occur. Because one thing we know, economic shocks are going to be a permanent reality of life in the Caribbean. And being open means that it affects us when it may not affect somebody else. So a hurricane blowing into the Gulf states and affecting Louisiana is not going to have any measurable impact on the GDP of the United States, because the United States is extremely resilient to hurricanes, right? Because they affect a very small part of their country, whereas we know that's not the same for us. Similarly, geopolitical tensions that lead to commodity price increases are not really going to affect Germany, but given our dependence in the Caribbean region, it can have a deleterious impact. So Caribbean countries have what we call structural vulnerabilities, and it is our responsibility to take it is our duty, rather, to take responsibility for our vulnerabilities. That's what societies that are advanced and do for themselves. So in Canada, they're vulnerable to extremely cold weather, where you can have freezing temperatures or below freezing temperatures for a long period of time. That makes life very difficult. Well, it shouldn't surprise us that Canada is one of the countries with the largest amount of underground infrastructure anywhere in the world. You go to cities like Toronto or Montreal, and you have millions of square feet of retail, office space, and activity, entertainment, and otherwise, that's underground. And different parts of the cities that you can get to. In fact, you can spend an entire week underground. That is an example of taking responsibility for one's vulnerability. The United States, after the oil shock in the 1970s, recognized their vulnerability to oil prices, something they don't have today because of the discovery of shale gas, etc. But back in the 70s, oil price rises nearly wrecked the global economy. It led to the abandonment of the gold standard. And recognizing that vulnerability, the United States set about to create the Strategic Petroleum Reserve, where they put aside millions and millions and millions of barrels of oil that they don't use in the event of a supply disruption or a massive increase in prices. So countries take responsibility for their vulnerabilities. They put in place direct strategies that are geared towards reducing the effect of those kinds of disruptions, whatever they're vulnerable to, on their economies and on their livelihoods, and gives them a much better chance to be able to recover quickly. And we must do the same thing. And it is for that reason, as far as economic vulnerability is concerned, that the government of Jamaica has pursued a strategy of ensuring that we strengthen our macroeconomic fundamentals, measured by, ensuring that we have fiscal sustainability, that we can withstand a fiscal shock. We have low debt and a lowering debt trajectory, that we have a high base of reserves in our central bank, so we can withstand interruptions in foreign exchange. And our reserves came to our rescue during COVID, where we went and had we had nearly 18 months of not $1 of tourism revenue. And yet Jamaica not only survived, but we thrived, yeah? So that is economic resilience in practice. And of course, building institutions to ensure that we have price stability and so forth. Now, an area of economic vulnerability that we definitely need to focus more on is the fact that for the Caribbean region, we have an overdependence on imported energy commodities. This is a part of the world with natural sunlight, and certainly many parts of the region, a lot of wind, and in some parts geothermal potential. Yet we import vast amounts of energy commodities every year. In the case of Jamaica, we import roughly $2 billion of energy commodities each year for our motor transportation needs and for our energy needs. So when we talk about the energy transition that we would like to see happen, it's no longer an energy problem, it's an economic problem. Because Jamaica's vulnerability would be substantially reduced if we never needed to import energy. So at $2 billion US, you're talking about 12%, if I'm, somewhere in that region, 14%, 15% of GDP on energy commodities. So before the year starts, we have to earn in foreign exchange at least $2 billion to take care of energy imports. And what it means is that you are more vulnerable, one, to energy commodity prices, and two, to disruptions in foreign exchange. If our energy could be sourced here locally, Jamaica would be so much stronger. Our growth would be elevated and disruptions would be limited. And so, connected with economic sustainability and resilience is this emerging concept of making sure that we are also climate resilient. And a big component of climate resilience from our point of view, and not importing the way in which the climate challenge expresses itself in other parts of the world is different from how it expresses itself here. And we don't have to borrow their language. We can speak our own. We are on the forefront of the climate challenge in terms of our susceptibility to tropical cyclones and hurricanes. And therefore, for us, a big part of resilience is making sure that we have the financial instruments that can protect us from the fiscal risks that occur. But we are also on the front line as well with the challenge that we face to transition from more traditional sources of energy that we import into cleaner, more reliable, more sustainable sources of energy. But to do that requires significant amount of resources. It requires risk-taking. It requires, of course, regulatory and other things that the government has to do. But we're going to need to be able to mobilize hundreds of millions of US dollars across the Caribbean region to ensure that this transition can be successful. The government of Jamaica is intent, as has been announced, on moving our energy mix to 50% renewables in about just over a decade. That will require a substantial amount of capital for that to be realized. In addition to that imperative, we're going to have to make the transition away from petroleum as a fuel for transportation and take advantage of the revolution that has occurred in electric vehicles. The magic of electric vehicles is that they are just more efficient. The tragedy of petroleum as a fuel is that it just wastes money, in that only about 40% of the combustible energy from petroleum in a motor vehicle engine goes into mechanical energy. Yes. So what you do is you start with the petroleum, right, which has potential energy in there. You burn it, basically, and the idea is to take the heat energy and turn the heat energy into mechanical energy. The problem with combustible engines is that you only take about 40% of the heat energy and turn it into mechanical energy. The rest of it is wasted. So every dollar that you spend on energy that you import, you're wasting 60 cents of it that does not get translated in the ability to move the car from point A to point B. That is the magic of electric vehicles, not because they look good. Elon, those guys, their genius was to make them attractive and to make them faster, certainly for some of the brands, in order to attract people's attention. But the magic of it from a public policy point of view is that it is just more efficient. It's just a more efficient use of resources. And a country would be, if you could just press a button or snap your fingers and have the entire fleet of Jamaica change overnight to electric vehicles, we would save hundreds of millions of US dollars. Because you need that amount of fuel for the fleet of motor vehicles. For the same fleet of motor vehicles, you need that amount of fuel if you're using electric engines. And that is the magic of it. And that is why the government has taken the step to reduce duties on electric vehicles to only 10%. To play our part in the energy transition. But even that, the government can't do it on its own. We are going to require the private sector to invest in the charging stations that are required. You're going to need hundreds of millions of dollars and many players. It's room open for many participants and for collaborative approaches to ensure that this transition is successful. That by the time that the Europeans stop producing combustible engine cars, which they have stated is going to happen within a decade, that Jamaica is ready. That you're going to need charging stations within, I don't have the science on it, but within every couple kilometers, yeah? That alone, just to put the charging stations in place, is going to require lots and lots of capital that the government is not going to be able to provide. And then when you go beyond energy, we are going to, staying within energy, let me just blue sky something. There are tremendous resources that Jamaica has in the bodies of water that surround us. And if you look at the map of the Caribbean, you see where Jamaica is situated. Our sea, the sea that we control, they call it our maritime boundary, is many, 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 many times the size of the country. And within those borders are tremendous amount of resources in the ocean, right? In the form of the life in the ocean, and in what might be on the sea floor, and in the wind that blows across the ocean. When you look at the wind turbines that exist in Scotland, in the water, where you have gale force winds, the technology exists today to basically have wind energy in the surrounding seas of Jamaica that could supply all of the energy that we need. But to be able to exploit these opportunities, we're going to need pools of capital that are oriented towards risk-taking, and pools of capital that have the ability to develop projects, to bring the technical assistance as necessary, to bring an idea from a concept to a stage where it can be presented for investment purposes. One of the challenges that we face in Jamaica, and an undertaking that I've made to the country in my budget presentation, is that we intend to leverage our macroeconomic stability in order to improve the quality of people's lives. And the best way to sustainably improve the quality of life is by investing in public services or public investments that deliver services to people, whether it be garbage collection, sewage, water, etc. The challenge that we face is that the government will never have the resources in its entirety that are required for the investments that we need in just one of those areas alone, just water alone. The investments that are required for the production, purification, storage, and distribution of water alone dwarf the capacity of the government to deliver. Yet we have a population that's looking on and saying, why Jamaica doing well? Where is my water? Right? No, the only way we're going to be able to bridge that gap is by structuring transactions in which the private sector, largely speaking, can invest in infrastructure-related projects that can end up delivering services to people. They don't have to be in the billing end of the cycle or in the distribution end, but just the production and storage, as an example. So it is for these reasons that the emergence of the Caribbean Community Resilience Fund is of interest to Jamaica. Now, I must say, I'm not here endorsing or selling any investment product. That is not my role. The product has to be duly licensed and registered with FSC. And they may say no. And then it can be marketed to the appropriate investor. Certainly, an investment product where you're locked in for 10 years is not appropriate for mom and pop investors. It's only appropriate for persons who can afford to have their money locked up for long periods of time. And if it's not, doesn't have a liquid market, it's not appropriate for mom and pop investors. If it's not liquid, it should be for persons who have the kind of resources that they don't need liquidity in a year or two. Having given that disclaimer, I can say that the emergence of an idea, a fund like the Caribbean Community Resilience Fund is timely and very exciting because it comes at a time where Jamaica and the Caribbean, we are all facing a potential crisis. Some people like to say a polycrisis, multiple things happening at the same time, where the solution to large extent is going to lie in having larger and larger pools of capital available to invest in our economies in finding solutions. So a fund like the Caribbean Resilience Fund, and it's targeting areas such as energy and renewable energy and energy and transportation, as I mentioned earlier, areas that we are critically in need of private investment, is like music to the ears of policymakers. The purpose of the policies that we pursue to achieve economic resilience and to sustain macroeconomic stability is to create an environment that is hospitable to ideas such as these. I dare say that 10 years ago or 15 years ago, an idea like this would not have the reception it's having today. And it is because of what we have been able to achieve as a country that this idea, that this fund has an excellent chance of being successful. And Jamaica needs it to be successful because we need pools of capital that can invest in the solutions that our people so deserve. And for that reason, I'm grateful to the CARICOM Development Fund and for your vision, to the USAID, and to others who have played a key role in the progress that has been made to date. And we hope that this will not be the only fund, that your success will eventually lead to others. And in particular here I'm speaking about being able to unlock capital outside of the region. Somebody said it earlier, it might have been Jason, there is a tremendous amount of resources in the world, private resources. In the United States alone, in Europe, hundreds and hundreds of millions of dollars that are looking for the possibility of return, and increasingly looking to have impact and to do good. And what we want is an environment and a landscape where those investable dollars can find a home in our region. And by finding a home in our region, accelerate the pace of development that our citizens can enjoy. So there's a lot riding on your success, and I'm here to wish you well and to wish you all the best. Jamaica needs what you are doing, and Jamaica needs you to be successful. Congratulations, and thank you very much.
Ladies and gentlemen, one more time, please, for the Honorable Nigel Clark, our Minister of Finance and the Public Service. Sir, thank you so much for endorsing this event by being here and being our keynote presenter. Your presence and your keynote presentation is already an investment in what this fund is standing on. And we say thank you again for the presentation that really underscored the Caribbean, the region, taking responsibility for our vulnerability, and also what it means to improving the quality of life for Jamaica and the region. So again, sir, thank you so much for being here. Ladies and gentlemen, we are wrapping up. We're coming down, winding down. At this time, I'd like to invite the co-founder, president, and CEO of SYGNUS Capital. When I first heard the name Beresford, I was, Beresford Hammond is going to be here, wow. Barris is widely considered as one of the region's top investment bankers, as one of the founders of SYGNUS Capital. He is living out his passion to create a leading alternative investment firm that uses creative approaches to unlock capital for clients. Ladies and gentlemen, the man who puts the I in innovation, integrity, and independence, please make him welcome.
All protocol observed. Ladies and gentlemen, good evening. I am going to be very short because there was a lot of interesting and insightful information shared today, and actually inspiring. And I would like to thank the Minister, of course, for putting in perspective the need that Jamaica has and the relevance of the Caribbean Community Resilience Fund. I'm going to start saying CRF. And of course, I will also like to thank Jason and Laverne for setting the platform and setting the context of what we are trying to achieve here today. I don't want to, and of course, James from Puerto Rico. I think within the SYGNUS team, let me say the Sygnesian family, James is the most passionate person about impact investing. James actually convinced us that impact investing is what we are doing every day at SYGNUS. Our philosophy and our vision actually call for SYGNUS to do impact investing. Our vision to drive the velocity of economic growth by using innovative financial solutions, by definition, means that we have to be impactful in the way we deploy capital to medium-sized firms across the region. And that we have been doing for the last 7 years. So what are we doing with the CRF? In Jamaican terms, we are stepping it up another level. We are stepping it up another level. What we are really doing, guys, with the CRF, and of course, I'll talk about the big topics that came out today, but what we are doing with the CRF is that we are institutionalizing impact investing in the Caribbean. And when you institutionalize a conviction in our world, alternative investments, you invest based on conviction. You might have a conviction that, let's say, in our case, medium-sized firms lack access to financing. That's a conviction, which means we have to find a solution for all these medium-sized firms. The same thing here. With CRF, we are saying we are convinced that the long-term sustainability, success of the Caribbean depends on our ability to deploy capital in two key economic areas: climate and economic resilience, or economic sustainability. Why? Because the risk, or the twin risk, as the minister pointed out, is so grave that if you don't do nothing, we risk it all. So this is a generational opportunity for us to set a foundation to mitigate the exposure that we face in terms of climate and economic resilience. And if we don't do it, then the cost to our society will be unbearable. And that is the fundamental issue that we are addressing through the CRF. And you have to be convinced about this. If you're not convinced about this, you won't invest. If you're not convinced about this, you won't put the work in to find the opportunities, assess them, monitor them, build capacity, as Laverne and Jason spoke about. You are going to just treat this as any other investment. And that's what we are trying to get everyone in the room who is an investor to really become convinced that the graveness of investing in climate, renewable energy, the blue economy, as well as investing in sustainable housing, infrastructure, agriculture, is so important that we cannot make the opportunity pass. And we have created the vehicle called the CRF to facilitate this. So I have 4 minutes. So I'm just going to summarize some of the things that inspire me today, and I hope that they will inspire you. The big things I heard: access to financing. Access to financing. Capital is hard to raise, right, Jason? Let me tell you a story. The first capital that we raised in SYGNUS, after speaking, Jason, myself, to maybe Greg, 300 persons, was 15 million. And there's a long story to get to 15 million, but it was 15 million. Today, we are asked, and we are very honored, by the way, Laverne, by the CDF to manage a fund where the key sponsor is already putting in $15 million. So access to financing is so important in the way the Caribbean economy is evolved, whereby we have a rigid system. The capital that's tied up in pension funds, it doesn't flow fluidly into investment opportunities. We are third world countries, so we can't access or attract capital from externally into funds. The CRF provide the pillar where we can pull on our multilateral partners, as Jason said. We are talking to international family offices who are really bringing equity to the table. CDF, of course, who already put in 15 million of catalytic capital, and a whole host of other international partners. So this vehicle is mobilizing regional capital, international capital, and individual capital. And if we get this right, which we will do, we are setting a platform that if you think about the Caribbean 5, 10 years from now, more international capital, our fair share of capital that is allocated to impact investing is going to flow into the region to address all the different gaps that we identified. So we'll deliver the return, right, team? No doubt. The other big thing I heard about today is, of course, partnership. Partnership. The CRF emerged out of partnership. Partners with a single conviction. That single conviction is about climate risk, economic resilience risk. That partnership has attracted the CDF to step up and put up 15 million. It has attracted cross-boundary, USAID, and I want to really shout out to USAID, who funded all of the research and the technical work that cross-boundary had to do to get the fund to this point. Rocky Mountain Institute, who is a specialist in climate and renewables. They are our technical partners. Of course, SYGNUS was invited to the party to be a partner as the fund manager, of which we are very proud. So what we are saying is that we are, and at the appropriate time, as the minister said, going to be inviting institutional and private investors across the region, and in particular the ones in Jamaica, to join this partnership, join the opportunity to transform and manage and take things in our own hands as far as it concerns managing and investing in climate and economic resilience. The final point I would want to make, well, I'll have to ask for one more minute. The other big thing I heard today is opportunities. Opportunities. Our pipeline for this fund is north of $250 million. It spans Bahamas, Jamaica, Barbados, Trinidad. I think we have something in Guyana, Grenada, Suriname. So we have a vast array of opportunities in various sectors. We haven't even talked about the natural assets that the ministers spoke about. You know, the ocean, the assets, the marine assets that Jamaica has. We don't even speak about that. We don't start exploring. But the point I'm making is that there is no shortage of opportunities in the region in which we can deploy capital to truly transform the fabric of the Caribbean society as far as climate risk and economic resilience is concerned. We see solar, renewables, hydrogen. Even last week we saw hydrogen energy opportunity. So there's no shortage. So we are all pumped up for that, to take advantage of all these opportunities. My last point, and this wasn't mentioned today, Jason mentioned a little bit about it, but as SYGNUS and as Signesian and as one of the Knights of the Round Table. Stewardship of capital. SYGNUS is built on what we call our 3I principles: integrity, innovation, and independence. That calls for us to be good stewards of capital. And what that means and how it manifests itself is that we have strong governance, very robust and insightful way to analyze deals, very creative way to analyze them, very interrogative way to find the truth behind an opportunity, to make sure that we can mitigate the risk. And as a consequence, it will allow us, Laverne, to manage your capital and the other investor capital such that it appears as if it was our own money, so that we generate not only the targeted return, but achieve the impact that we are tasked with achieving for the CRF. And why is that important? It is important because we understand that even though we are presenting local and regional investors with an investment opportunity, the success in 10 years' time, the success of the CRF will not only be measured by the impact, how many jobs we create, how much renewable energy capacity we have helped to install, how much affordable housing and sustainable housing we helped to build. It will be measured by how successful was the CRF such that it truly mobilized international capital into the region, into impact themes. That will be the true success of the CRF. If we achieve that, then the problem with access to financing, we start to address that. And that is one of the greatest challenges that we face. So stewardship of capital, I'll leave that with you as a Signesian. So my final point, ladies and gentlemen, is really just to say thank you to all our partners, the CDF, USAID, Cross-Boundary, RMI, every partner, everyone who's here today, and thank you for listening to us and considering this opportunity. Have a great evening.
So, are you ready to invest? I hear 5 people, Beresford. I hear 5 people. Let me try it again. Are you ready to invest? Hey, that sounds more like it. Ladies and gentlemen, please put your hands together once more for Mr. Beresford Gray, co-founder, president, CEO of SYGNUS Capital. Thank you so much, sir, for your closing remarks. Absolutely. You know, there's a saying that says you should, take the time to make hay while the sun shines. And if you live in the Caribbean, especially here in Jamaica, your grandmother will tell us you have to put up a rainy day. Anybody ever hear that before? Right? But the idea is to really put up to withstand those rainy days and to actually use the rain on those rainy days for our sustainability. And that's why it's important right now for all of us to get involved at this time, because we have to continue doing the work necessary to create a region that will be resilient and sustainable, not just for us in this time, but for the future, for our children, for our nieces and nephews, for the community, for the country, and for the region. And we want to say congratulations to SYGNUS on being, of course, the managers of this Caribbean Community Resilience Fund. Once more, thank you. Built on integrity, innovation, and independence. Congratulations to SYGNUS. Ladies and gentlemen, to give us the official vote of thanks, we're inviting at this time Mr. Gregory Samuel, Senior Vice President and Head of Investment Banking for SYGNUS Capital. And Gregory is Of course, he is the man that leverages his diverse skill set, creative thinking, and deep financial and engineering expertise to divest innovative financial solutions for corporate and individual clients. Come on up, sir.
Indeed, it has been a great evening. Dr. the Honorable Nigel Clark, Member of Parliament and Minister of Finance and the Public Service, valued partners from the CARICOM Development Fund and the U.S. Aid, SYGNUS Directors and Chair, I see Mr. Milton Brady, our Chairman, Co-Founder, Gazan Azan, Co-Founder, Dr. Ike Johnson, CEO and President of SYGNUS Group, Mr. Beresford Gray, Jason, James, also see Linval here as well. Executives, ladies and gentlemen, good evening. On behalf of the SYGNUS team, I stand here this evening filled with gratitude as we draw the curtains on this special event introducing the Caribbean Community Resilient Fund, CCRF bears. Tonight we witness the convergence of vision, collaboration, and commitment toward a shared goal of resilience and success for the Caribbean region. First and foremost, our sincere appreciation goes out to the CARICOM Development Fund for their visionary leadership in initiating and investing in the CCRF. Their foresight and dedication have laid the foundation for a transformative endeavor that will undoubtedly shape the future of our region. We extend our deepest gratitude to USAID for their invaluable partnership in sponsoring the development of the fund. Their dedication to addressing the economic and climate risk of the Caribbean have been instrumental in bringing the CCRF from concept to reality, reinforcing the power of collaboration in driving positive change. A special acknowledgement due to cross-boundary consultants for their exceptional effort in orchestrating the myriad of elements required to actualize the CCRF. Their expertise and commitment have been indispensable in managing this immense project and navigating the complexities of this endeavor. We also extend our thanks to RMI, Rocky Mountain Institute, for their invaluable support and expertise in climate and energy-focused projects, contributing invaluable insights to the CCRF's strategic decision. And of course, heartfelt thank you is reserved for the Dr. the Honorable Nigel Clark, Minister of Finance and Public Service. We also get an insight of his engineering expertise. We know he's a mathematician and trader of financial instruments, but tonight you showed us that you are not only a maths person, but a budding mechanical engineer. Thank you, sir, for delivering a compelling message on the importance of investing in economic and climate resilience for the Caribbean. Your leadership and advocacy are a beacon of hope for our region. Future Minister. We are deeply grateful to Dr. Laverne McFarlane, Chief Economist at the CARICOM Development Fund, for sharing a moving message for the CARICOM Development Fund. What's the tagline again, Debbie? From the sea line from the seabed to the skyline, underscoring the significance of this initiative to both the organization and the wider region. A special word of appreciation goes to Miss Debbie Bissoon, our Master of Ceremonies, for a graceful hosting and masterful facilitation of tonight's proceeding. Your warmth and professionalism have ensured a seamless and engaging experience for all. We also like to extend a heartfelt thank you to L Creative for their invaluable support in coordinating and executing this event with precision and excellence. A sincere thank you to the members of the media for their coverage, and to our public relations partner, Garrick Communications, and our social media partner, One Great Studio, for their invaluable support in amplifying our message here tonight. And of course, the SYGNUS team, the Sygnesian, the different departments, the investment management team led by Jason, the investment banking team, and in particular the marketing team. Your dedication and passion towards driving fundraising efforts for CCRF are truly commendable. Your unwavering commitment to our cause truly illustrates our vision and culture. Our marketing team for their tireless efforts in bringing this event to fruition, showcasing the importance of effective communication and promotion in driving meaningful impact. Last but certainly not least, to all our esteemed partners, shareholders, directors, and guests who have graced us with your presence tonight, we extend our sincere thanks for your support and commitment to our shared vision. Your presence here tonight is an indication of the collective resolve to build a more resilient and prosperous future for our Caribbean. In closing, let us continue in the spirit of collaboration and determination that has defined this evening's launch, as we look forward to a more resilient and affluent Caribbean. Ladies and gentlemen, I thank you.
And we say a big thank you to Mr. Gregory Samuels. Thank you so much, sir, for your vote of thanks. Ladies and gentlemen, that brings us to the end of our event. We encourage you all to do the right thing and join the SYGNUS, USAID, CDF, and their partners as we fortify and make our region resilient and sustainable from the seabed to the skyline. There we go, through your investments. And also remember the unmatched rates of returns. For more information, we're encouraging you all to visit info@sygnusgroup.com. But also don't be quick to leave. This is your opportunity to ask even more questions, but also to network and have the conversations necessary. It has been my pleasure to be your host this evening. My name is Debbie Bissoon. Have a great evening. Thank you.